Active Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol BIIB, that's Biogen Incorporated. The chart we have here today is a 1 hour chart. Each candlestick on this chart representing 1 hour of trading. So we go back to the 31st of last month right over here, and you can see that we had some good support. BIIB was making some progress, had some good support right there at $287, but we had some bad news right here, which caused this massive selling off. We crashed through the support at $258, couldn't hold that level, broke down, and we channeled for a bit there, about 3 days of channeling, before legging down to the next area of support, which is $244. The good news is that we didn't break 244, we bounced off it, and this candle that touched 244 is on the bullish side. So I think we could see that this stock will try to break back up to the $258 area. But first, let's focus on why we had the selling off. So it looks like Biogen reported top-line results from the Phase 2 Synergy study, which didn't have the results that it wanted to. Now, that study was evaluating its product opicinumab, it's kind of a tricky name to pronounce, which is an investigational fully human monoclonal antibiotic being developed as a potential neuroparative therapy for people with multiple sclerosis. So this study missed its primary endpoint, and the evaluation didn't improve physical function, cognitive function, or disability. However, it did have effect with a complex and unexpected response. Now, Biogen also said that one of its most closely watched experimental drugs did fail to improve the health, and that's just basically reiterating what I just said. So that test did fail, and it did cause a major setback to the company's new pipeline, which contributed to the broad decline. Now, along with that news, I would also like to mention that occurred on June 6th. This massive selling off occurred on June 6th. And incidentally, on June 6th, that's when the biosector also took a hit. Now, the biosector has still been trending down since June 6th. And SP Bio went from 46.11 down to 43.16, where it's currently trading at. And since Biogen is a large cap company, it is greatly affected by the overall health of the biotechnology sector. So just keep that in mind. A lot of this was indeed a selling off due to the failed phase results, the failed phase 2 results rather. But there's also some merit that the entire biosector has been down for a while as well. So it's definitely factoring that in as well. Now, what do we need to do to see this downtrend reverse? Well, the first thing we needed to do was bounce off the support level at $244, which is occurring. But there's still a lot of negative signs for this stock. For example, this red line, that's the 200 moving average. This blue line is the 100 moving average. We never want to see those major moving averages above our candles. That signals that we're in a pretty powerful downtrend. Now, that yellow line is our 50-period moving average, and we don't really want to be below that either, but it's not nearly as hard to break above that as it is to break above the 200 and the 100 simple moving averages. Falling right along with that theme is the fact that we're also below the 20 and the 10 period simple moving averages. So we definitely don't want to be below the 200 and the 100. We don't really want to be below the 50, but it's not always that difficult to break above the 50. But we also don't want to be below the 20 and the 10, and we are actually below all those moving averages right now. So this downtrend is pretty strong. Now, the good news is you can see here we had a little bit of after hours trading going on, and the after hours trading block that happened last did literally just break above that 10 period moving average. So it is starting to leg up. Following down here and looking at our MACD indicator at the bottom, you can see that we had a bullish cross, and let's see where that occurred. So that bullish cross on the MACD occurred right on that beautiful candle that I just mentioned, which bounced off the 244 support. So the stock did bounce off, it did cross bullish on the MACD, but that bullish cross was below our zero line, the zero line being right here. If the MACD crosses bullish and it's still below the zero line, it's really not the strongest indicator of a bullish reversal. We need to see the MACD cross bullish above the zero line where it signals an uptrend. Now, on that same note, you can see that the slow and the fast moving averages of the MACD indicator are trying to leg up above that zero line, but they're not quite there yet. On the flip side, it's not nearly as bad as it was here. When we had that major selling off, you can see we were far, far, far below the zero line. And that histogram was also looking really ugly right there. So our histogram is looking bullish. You can see we have some blue above the zero line, but on the same side we had the histogram looking bullish over here, and we really didn't we didn't really make much progress. We did touch the resistance here at $248, but we couldn't break above it. And part of that is the fact that even though the histogram was bullish and we were in a bullish cross, once again, the MACD averages were below that zero line. So the first thing we want to see is a bounce off 244, which occurred. The second thing we want to see is a break above the 10 moving average, which did occur. The third thing we want to see is that 10 period moving average cross above this green line. That's the 20 period moving average. When that 10 crosses above the 20, that signals that we could see a potential reversal. However, that did occur here, and we didn't have a reversal, once again because the MACD. So the next thing we want to see is the MACD break above the zero line. If the MACD breaks above the zero line, I'm confident that we'll probably see the 10 period cross above that 20 period moving average. And if that does happen, then we can start working our way back up to the $258 area. Now, once we get to 258, we're going to have some major resistance there, as we had here and here. We're going to test 258 again, and we might get denied, but we do need to break above 258 first. If we break $258 to the upside, then I think that we can definitely gap up all the way to about $287. There's not really any strong resistance there. The only resistance that we do have is trailing resistance from these simple moving averages. And though the simple moving averages can absolutely act as resistance, it's not nearly as strong as resistance like these pivot points would bring. So if these moving averages start turning back up to the upside and we break above $258, I think we can gap up to 287 fairly easily, rather 258 fairly easily. We just need those bullish indicators to occur first on the way up. Now, falling back in line with breaking above 258, the next area of resistance would be 287, and after that 335. So this can definitely get back up there. We do see some consolidation here, and it did bounce off that support, so we might just see it kind of channel between these for a while, especially since the biosector is still down. But if the biosector turns around and this continues to bounce up, I think it's going to look fairly healthy. But as it is now, I would definitely be careful. And I will absolutely like to add that if $244 support breaks, I would not be holding onto this stock really unless you have a really nice cost basis, since the next support is all the way down here at $203.50. So if 244 breaks, the stock's going to be looking really, really bad. But so far it bounced off 244, and let's see what comes in the near future for this stock. Now that's all I really have to say about BIIB, Biogen rather, ticker symbol BIIB. But yeah, I hope this analysis helped you guys out. If you have any questions, leave a comment below. And I don't think I mentioned this, but I will give a shout out to Pyro Guy SF on Reddit there, giving me this ticker request. So thank you. This was a fun analysis to do. I'm definitely going to be watching Biogen myself, and I'm a big fan of the biotechnology sector. So if I see the biotechnology sector leg up, I'm definitely going to be keeping my eye on the stock even more so, since it has that very nice gap of potential all the way to $287. So let's see what it does. And yeah, I'll catch you in the next analysis. You guys have a good one.